Hey everyone, it's Bayan, your fit accountant, and today I'm going to be talking about 6 reasons why you need a CFO. Number 1, review your books. A CFO, when you sit down with them and your books have been prepared by a bookkeeper or CPA, sometimes both, a CFO's job, they can review your books and see what things can be done. So what that means is, at the end of the day, you will generate some sort of financial statement. That's a profit and loss, balance sheet, statements of cash flow. A CFO will walk you through those books and make sure it makes sense. For example, if you have a monthly profit and loss statement, you know how much you make each month, the revenue, the expenses. Reviewing with your CFO, they could look at it and see if something looks off. For example, if income is significantly high in a certain month or expenses are really low in another month when you know those expenses are the same throughout the period. So at the end of the day, you need your CFO to review your books and then they could provide guidance. Reason number 2, a CFO could help you with industry benchmarking. So what does that mean? Every business is in some sort of industry. For example, if you sell pizzas, you're in the food and beverage industry. If you sell pencils, you're in the supplies industry. If you are a CPA, you're in the services industry. So depending on your industry, there's certain benchmarks of how you're doing or the standard level of how you should be doing. So working with your CFO, that's the research that can be done on certain businesses that are similar to yours or the business that you are trying to aspire to be at that level. And they could walk you through strategic ways and tips and tricks on how to get where you need to get to be at the industry benchmark. Number 3, create a business roadmap. A business roadmap helps any business owner know where they're going financially and also operational wise, but for purposes of the video, financially, of how many months they need to reach a certain number or a certain profitability or even a certain milestone. So working with your CFO, they can guide you through this process so you have a plan. Because at the end of the day, if you don't have a plan, what are we doing? Number 4, KPIs and critical drivers. At the end of the day, every business needs to look at their KPIs. They need to look at their metrics and know particular things in their business and watch it and focus on that. For example, is their accounts receivable turnover? How good is that ratio? Are they collecting their accounts receivable? As a CFO, when you're reviewing your books and your financials, if your accounts receivable is really high and it continues to be high, then your customers are not paying on time. That's something you have to look at and drill down, because if your customers are not paying on time, your cash flow is down. If money's not coming in, you're out of business. So KPIs are very important. So work with your CFO and know which KPIs and metrics pertain to you that can help the business and you can focus on and make sure you're always looking at to get your business to grow. Number 5, cash flow analysis. As you all know, it's all about the Benjamins. Cash flow, cash flow, cash flow. A cash flow analysis sees where your business cash is going. So I always talk about the cash flow statement, one of the most important statements in every business, because it's a roadmap of where your cash is going. Operating cash, investing cash, and financing cash. So cash flow analysis, it walks through where the cash is going, and you can see a high level picture and drill down on maybe cash is going somewhere it shouldn't be. For example, if majority of your cash is being to pay back loans, then your business is heavily leveraged, which means you have a lot of debt. And that's something you have to look at and discuss with your CFO and make sure maybe there's things to lower that debt or not have that debt at all. Right? There's also, if a lot of your cash is going to pay for equipment, you are buying a lot of assets for your business, but you might be buying assets you don't need. And it's really killing your cash flow, which hurts your operating cash. As you all know, you need your operating cash to run the business, because running the business helps increase revenue, and no business is anything without their sales, because you need income coming in. So talk to your CFO, walk through your cash flow analysis and see what you need to do, where you need to cut down cash going out, and make sure you're maximizing on the cash coming in. Number 6, the last but not least, forecasting and budgeting. Also another crucial item that you need, and your CFO can provide guidance with you to make sure your business knows what the future looks like and how much are you putting away or how much do you need for each expense. When a business is ran for a year or even some might say even 6 months, you sort of have a trend of where your expenses are going. Some people might wait till a year is done, but it does not hurt. It only helps you if you engage a CFO as soon as you can, because they can help you walk through as the business is growing, even if your business is scaling. Now, if your business is cyclical, you definitely need a CFO, because they can help with forecasting on when the cash is supposedly going to come in based on historically, and also what you need to budget. So a biggest expense could be a pretty decent expense could be employee salary that you can budget out and know in the next 6 months we need to hire more because we need to pay more. Or, for example, if your business is very consistent and goes through the 12 months, that's easier to budget and also forecast, because you know where your expenses are and you know what's coming. And then your job could just be really just increasing sales, going out there and generating more business. So all these 6 items is the reasons why you need a CFO. And a CFO doesn't have to be an in-house CFO, because a CFO nowadays costs anywhere from $150,000 to $300,000, some even more. And as the average business owner can't afford a CFO. Well, guess what? There's something called a virtual CFO, and that is a person who you're hiring part-time, but they're needed for the deliverables you need, which is going over the 6 items that I went through. So always know that every business can afford a virtual CFO. It might not be a real full-time CFO, but it could be a virtual one, which means it's part-time. So don't let the consensus scare you because you hear chief financial officer that, you're like, whoa, I can't afford that. Go out there, reach out, because there are a lot of them out there that are willing to help. I also serve as a virtual CFO to a handful of my clients, and we walk through those 6 items to make sure that they know how their business is doing, and they have a roadmap and they have guidance as their business grows, or sometimes their business goes down and we can figure out why. If you like this video, please subscribe, like, and comment below if you have any questions, and I'll get back to you.